In our previous episodes, we have established that the Great Meltup began on September 18th of 2024. So this is when the Federal Reserve pivoted to an easier monetary policy, which will reaccelerate inflation. So the Fed did this out of necessity to bail out the government's unsustainable debt situation. It does not solve the problem, but it does temporarily make the situation more manageable. So I will tell you what you need to do in order to protect yourself financially. Okay, so let's start with this. Take a look around you, just realize what is happening. Since the pandemic, we have been living through the everything bubble. So even with higher interest rates and quantitative tightening, elevated inflation persisted. Now, with interest rate cuts and soon to follow quantitative easing, the situation will go from the everything bubble to the everything bubble on steroids, or as I have coined it, the Great Meltup. So the Great Meltup phase will be divided into two eras. So the first era will be the Great Meltup pre-crisis, and the second era will be the Great Meltup post-crisis. Now, during this pre-crisis era, which is what we're in right now, we will see inflation reaccelerate. So this pre-crisis era will end when the government and Federal Reserve manufacture a crisis to cut interest rates to zero and print a tremendous amount of money. So the crisis will usher in the second era of the Great Meltup, and we will see explosive inflation. Now, the second era of the Great Meltup will end when other countries and institutions lose faith in the dollar system. So this will leave the US government and Federal Reserve no choice but to attempt austerity and deflation, which will trigger an economic collapse. So when the collapse becomes unbearable, the government and central bankers will have no choice but to enter a new era of US hyperinflation. So of course, hyperinflation will bring the demise of the dollar system, and then we will enter the next stage, the Great Reboot. It will be the birth of a new financial system and a political revolution. But in today's video, we need to focus on how to capitalize on the situation during the Great Meltup. So the Meltup stage will last for many years in total, so at a minimum, for the duration of this decade. Inflation will reaccelerate, it will be vicious, and I want you to be prepared. And not just for you, but for your family, for your dependents, for the people that you care about. It is our responsibility, so yours and mine, to defend the people that you care about, because the government will not provide sufficient assistance when there's an economic collapse. So here's what will happen. This is inevitable. As inflation accelerates, the price of almost everything will go up. Groceries, healthcare, insurance, property taxes, tuition, vehicles, daycare, just about everything. So inflation will increase your expenses, no doubt, right? But inflation will also increase the value of assets. You must protect yourself from inflation by buying appreciating assets. I would prioritize owning a home and stocks. Other assets that you can consider would be gold, silver, Bitcoin. Now, what I told you is a straightforward concept. However, I must state that explicitly because there will be many people with the mentality that the price of homes, stocks, Bitcoin, gold, silver, they're so high, I'll just wait in cash and hope for a crash. So that is logical thinking when the government and Federal Reserve do not interfere with the markets. However, the politicians and central bankers have hijacked the markets since the great financial crisis of 2008. So the financial system and the markets are now completely rigged. Inflation will accelerate, and asset prices will continue exploding to new record highs. So we are in the Great Meltup, and you are witnessing this with your own eyes. Asset prices, they're not going to go up in a straight line. There will be bumps along the way, but they'll just keep going higher. So here's what you need to focus on. Invest in the stock markets. Whether it's through a retirement account, a tax-deferred account, or a brokerage account, you must invest. Invest in index funds and ETFs that track the S&P 500, but please be aware, as the market soars, you will not get rich because it's all relative. If you want to get rich in the stock market, then you must outperform the markets. But by definition, If you invest in an S&P 500 index fund or ETF, you will not beat the market. You will just keep up. So I'm giving this information to defend you economically. I'm not here to get you rich quickly. So this is a defensive move. And you need to make it a priority to be a homeowner. So I hear many people say that now is not a good time to buy a home. And you know what? I agree. A better time to buy a home was in 2020, or better yet, in 2015, or better yet, in 2011. In a few years, home prices today will look cheap. And listen, I hear this arguments on why it's better to rent. People say that if you buy a home, it's not really yours because the property taxes are so high, and if you don't pay them, you lose your home, so it's a bad idea to buy a home. So let me tell you this. If you're renting a home and the property taxes on that home go up, your landlord passes on that rising cost to you. But it's your landlord that enjoys the benefits of the rising property value. As a renter, you only get the drawback. And as inflation pushes up your rent, if you don't pay your rent, you get evicted and you lose your home. So if you plan on living in a certain location for more than 3 years, then you're better off buying than renting. So those two assets should be your priority, buying a home and getting invested in the stock markets. If you can go beyond that, get exposure to gold, silver, Bitcoin. If you hate the idea of Bitcoin or cryptocurrencies, I'm not going to try to change your mind. In that case, go for gold or silver. So regarding gold or silver, you can choose to buy and hold them physically, or you can buy them on the stock markets. Now, let's just say that you want to buy gold on the stock markets. You can buy a gold ETF, which is like buying shares that represent the value of gold. So personally, I prefer to hold it physical, but an ETF is more convenient if you want to sell. But I'll tell you this, if you want gold exposure, I recommend that you do not buy a gold mining stock. So what I'm saying is avoid the mining companies. It's because even if the price of gold goes up, the stock price of the gold mining company can fall if they run their company poorly. Now, I want to be clear. So I'm saying that you must invest. However, you don't want to be extreme and be penniless. You need some cash for paying your bills, cash on hand, saving to pay for something larger in the near future. So we're talking about buying a home, buying a vehicle, starting a business, or reserve money for a specific reason. Let's just say if you want an emergency fund. So yes, you will need some cash. However, don't hold an excessive amount of cash, not in this environment that we're facing. So at the time of making this video, you can get paid a 4% to 5% interest rate on your cash. So that helps to offset inflation on your cash position, but being in cash, excessively in cash is not a viable long-term investment strategy. I would not lock in a long-term CD for 4%. I'm saying that because accelerating inflation will make that a negative real rate of return. Now, this is very important. During this multi-year great melt-up, asset prices will not go up in a straight line. There will be pullbacks, corrections, and crashes. Those are buying opportunities. Don't panic sell, buy the dips. During the great melt-up, when the government and Federal Reserve manufacture a crisis, the markets will crash. But that crash will be short-lived. It'll be a V-shaped recovery when the Fed cuts rates to zero and prints a massive amount of money to rescue the situation. So that will be the ultimate buying opportunity. If you want to hold some money in reserves for that moment in the future, I don't blame you, but don't hold an excessive amount of cash for this crash, because that could be many years from now. I want to give you a heads up. My next episode will cover what happens after the great melt-up, which will be when the government chooses austerity with fiscal policy and the central bankers truly tighten monetary policy. So this will trigger the ultimate economic crash and all asset prices will plummet. But I would say that's very improbable of happening this decade. So we have time. Until then, get invested and ride this wave up. Please subscribe. I thank you for the support, and I wish you a very nice day. Take care.